Hello traders, Gary Wagner with the Gold Forecast here. This is a special edition of the Weekend Review. It was recorded Saturday, November the 13th. Amidst a heavy round of profit taking, gold closed about $40 lower on Friday, cash market closing at $1368.23. On today's report, we're going to, 1, review the week, 2, talk about this bull move that we have just seen, which is the largest single rise in history, as we saw the market go from 1140, just above that, to 1440, a $300 move from August to today's date. Traders, on Thursday of this week, the Chinese made an announcement that there was a potential hike going to happen in their interest rates, and that created commodities worldwide to kind of fall into a free fall. The fact is that if the money supply in China tightens, that allows their businesses to grow slower, it allows them less money to buy gold, and all in all, it will slow all of the economies down. This had the knee-jerk reaction, of course, of creating a lot of strength in the US dollar. And we saw as the dollar grew, gold really fell out of bed, as we can see right here. Now, the chart on the right is a 240-minute chart. And the one on the left, of course, is a daily chart. The reason that I like the 240-minute chart, it kind of breaks up the trading activity into a couple of bars rather than a single bar, so it gives me a much better idea. So, for example, when we look at these tops, you can see there's a little bit more information on this top here as opposed to this top here. So it's something good for me in terms of being able to diagnose and evaluate the market. Where do we think the market's going from here? Well, first of all, I do want to tell you this. Fundamentally, nothing has changed in the market. The Euro debt crisis, it's still intact. When we look at our economy, although it is improving, our jobless rate is huge, and our economy, although we are out of a deep recession, we are still in a recession. And so that the tone itself, I believe long term, is still extremely bullish on gold. However, that's got to be tendered with a caveat. And the caveat is that traders are going to look for any reason really to sell this market off. And in terms of a straight retracement, I will have to wait to see next week whether or not we get a weaker look next week and we get follow through in the selling, or if it forms a base and just continues up. Because if it just continues up, my sentiment is, in terms of our Elliott wave, we will have what's called an extended wave count. You can have extended wave counts rather than going to 5, you can go to either 7 or 9, and we'll talk about that through this special edition of the Weekend Review. The other chart that we absolutely want to look at this afternoon is going to be our weekly chart. This is the weekly chart, of course, of gold. And as you can see, we did get a weekly pattern called a dark cloud cover. That's right here. It is a 2-day pattern. A dark cloud cover, if confirmed, can signal quite a sell-off. Now, here is an engulfing bearish. This is a shooting star in here. Here is another engulfing bearish and another shooting star. So these three patterns, the star, the engulfing bearish, and the dark cloud cover, have been very strong signals when confirmed, and I underline that, when confirmed, to signal a potential retracement in the market. According to the weekly chart, it tells us it's time to look. It doesn't tell us that we truly have a solid retracement intact. We absolutely, of course, are off of our record highs. And when we consider the fact that this record high right around 1425, once that was hit, the market really, it's the new price to beat, so to speak. For those of you who recall and follow our Kitco reviews, last week I was looking for extended markets. I was looking for around the 1488 because I thought that we'd be able to just trade right through that 1421, which is where I peg resistance at. But for those of you who recall, my commentary back on the 18th was at 450 gold. Did we enter a correction first? And if you recall, that was this engulfing bearish that we noticed come in. And this is where my subscriber base, we did pull out of our positions here. and actually pulled profits. As you can see, we did a little bit of research. Besides the engulfing bearish, we had the Andrews pitchfork, and this really gave us an indication that we hit a top. This top at this point has absolutely held as the absolute all-time high of gold. So do I think it's going higher before a retracement? Well, I have to tell you this. We have to see where this market wants to retrace first, and at that point look to reevaluate and enter the market on the long side from there. This week is going to be a telltale sign, because if we get a continuation, I've got some targets 1350 and 1320 that the market might actually want to go to. If traders really digest this information and realize, as I believe, that a tightening money supply in China will slow down all of the economies here on the globe, that can't bode well for any type of recovery, any kind of debt repayment, anything that we do in a thriving and viable global market. Now, my subscriber base knows that I did recommend that we exit our long positions. We did take a loss, and we did that on Friday. And let me explain what that was based upon more than anything else. We had what I consider to be a double bottom. This top right here at 1380, 1381. This was, as far as I was concerned, very, very critical support. When I saw the market break through that area, when it was trading here, I saw what I believed to be a double bottom, as long as it was holding there. However, at the moment that it broke through that area, that's when I put up a special report for my subscriber base and said, let's just exit this trade. We'll look to re-enter it when we feel safe. But I felt that the proper action at that point, we've made so much money in this market, was to hold on to that profits and to exit all of our trades with a neutral stance over the weekend. And that was based really upon the fact that I saw us breaking through what I consider to be was a critical double top that we needed to be able to hold on a technical basis. Of course, we were not. It did break through, and we were stopped out. We are sidelined. Where do I think it's going from here? What we need to do is to see where and how it reacts. In other words, it's going to either come beginning of the week, move back above this 50% retracement line, and this retracement line is based on this area of trading right in here, and if it can move back above this line right here, it should find support again at that 1370 area. If it cannot, though, the next logical point is going to be this 61% sell-off, and that takes us to 1358. So if it doesn't hold, I have to see how it reacts right here at 1358. Lastly, traders, I want to talk to you about what I mentioned at the beginning of this report, and that is potential for an extended wave count and where our wave count is currently, or where it might go. As you can see, this activity, of course, on Friday, this is Friday's candle right here, absolutely went into the area of the top of 3. Now, straightforward Elliott wave theory states that if we have a particular wave count, this is the beginning of wave 5, and you have this move down. Once it has actually entered into this area, of course, if it continues lower, it's going to be a corrective wave. There's no doubt about that. If, in fact, what we see is some sort of a recovery, though, through the beginning of the week, we will still be in wave 5, because the one thing is, if this was wave 3 or wave 1, you get the correction, but if the correction comes within the area of the previous wave, it's absolutely negated, and once it's negated, your wave count is still intact. So that's one possibility. Of course, the other possibility is that we continue to have our retracement, and if we do, then we can ascertain that this wave is probably over, and we're going to go to our A, our B, and our C wave down before re-entering a impulse phase. There is yet one other option, and that option is that if you look at Elliott wave theory, although very, very rare, he talks about what are known as extensions. Now, there's a couple of very, very golden rules that can't be messed with when you talk about extensions. The first thing, on an extension can happen, but it can only happen to one wave out of the entire impulse wave. It can be, in other words, if you have an extension on 1 or 3, you cannot get it on 5. If you have an extension on 1 or 3, then you're never going to get an extension again. It can only happen for one wave count. Now, according to Elliott Wave, you can actually go from 5, have a retracement, and then go into an extended wave count of 7, and then actually 9. That is possible. Now, will that happen? That's something that we're going to have to look at through the week. But I want you to realize that this week, as far as I'm concerned, is going to be absolutely critical, because it's going to determine, as far as I'm concerned, on this wave count, whether or not we have a full-blown retracement intact, and what we witnessed was absolutely the top of the market and we've entered a corrective phase, or is this a retracement and we're going to either negate this and continue on our wave count of 5, in other words, wave 5 is not finished, or is it going to be what I call an extension, and an extension would take us to wave 7. These are things that we'll have to determine through the week. This is going to be a fun week. I can promise all of our traders that. This has been Gary Wagner with a special weekend review for the gold forecast. We'll talk to you tomorrow on Sunday and start planning this really, really exciting week. Bye-bye.